Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This simply starts with another video, and this time this video pertains to some of the stocks, at least five of the stocks that could do well this financial year, in my opinion. So, five stocks for this financial year that could make you something in the region of 20 to 25%. I'm uh, not looking at a very high returns this year. I think this is a 2013 sort of market. So you have to be very precise with the stocks that you pick. But these five stocks can definitely gain you a lot of momentum going forward and can make you a decent 20 to 25% returns over a period of time. So let's get started. So first of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. And whatever stocks that I talk about is purely for educational purposes. I am not a member of NSE or BSE, and neither I am a portfolio advisor officially. So kindly take that on note. This is all my market experience over the last 12 years or so, that is talking at the moment 11, 12 years. And I want to share my knowledge with you all in order to make you understand as to how the markets work. But this is not at all a guidance towards whatever buying or selling that you can do in particular stocks. You can go ahead and talk to your financial advisor and then take a final call. So before I talk about these five companies, here's a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. And also if you cannot pay on Patreon, you can get a 1 year access on WhatsApp. Or you can email me and you can email me for that WhatsApp membership, or you can hit the join button and join me on YouTube as well, and you get all the benefits there as well. You can ask me queries there as a member, so you can do that. Thanks a lot for all the Patreon members who have been with me over the last 3 4 years over this journey, and I hope I'm bringing some amount of, you can say, financial stability in your life by giving you knowledge, particularly on different sectors and stocks. So I'll endeavor to do the same going forward. So there is a small cap watch list, there is a mid cap watch list that I update every week, and I have made major changes in there last week, and hopefully you would be liking that. So thanks all of you for the support. Now let me take you to the Screener website, and we'll discuss about these five companies. And you can probably, if you want to, just pause the video right now and probably leave the video altogether, then you can probably leave it, because you can view as to which five stocks I'm going to talk about. This is basically Blue Star, APL Apollo, Sundaram Fasteners, Newgen Software, and ABB. So let's begin with ABB India, which is in the you can say capital goods domain and engineering domain. And now this is a very interesting you can say story with respect to the capital goods sector altogether. Just to brief you on the sector, and then we'll go to the stocks as well. The sector itself did extremely well during 2004 to 2008 period, early 2008, and then the massive selling happened. And since then, so over the last you can say about 10 years, 15 years, it has done nothing, and the stocks have been up and down, and not doing much as the index has gone over a period of time. But ABB per se, over a 5 year period, now if you look at it here, from 1140 in 2018, it remained around here and crossed 1100 around this period in 2020, after the pandemic. So after the pandemic, the massive move took place, and that made people understand that how big this opportunity could end up being. So if you look at it here, in November of 2007, it made a high closer to somewhere around 1450, 1450, 1500. And those 1500 levels did not come until we reached somewhere around here. We went to 1500 in 2018 again. This was a double top. and then eventually we fell, and then we took that out. And once we took that out, this was in August of 21, there's no looking back, and the stock has more than doubled from those levels over this, you can say, 1.5 years or so. So in my opinion, this is what has happened with most of the capital goods companies, and this is what has happened with the sector altogether. And I believe that this trend is going to continue in FY24, not in all the stocks, but in some of the stocks like ABB, Siemens, L&T. They should end up doing well. So ABB is into the infrastructure space, ABB is into the power space, and they are doing reasonably well in these sectors. And so they have a lot of projects with them in different sectors altogether. It's like a gamut of projects, one of the larger players in this sector altogether, with 71,000 crore market cap. So overall, I believe that with the kind of order book that the company and this sector possesses for this 1 year, especially with the elections around, government will look to do a lot of, or complete a lot of projects, and will look to push a lot of projects before the election. So this is going to do extremely well going forward. So in my opinion, ABB, if one can buy around 3200 or so, with a definite stop loss of closer to say 3000 levels, around 3000. So you buy around 3200, keep a stop loss of 3200, 3000. So that's a 6-7% stop loss, and you can definitely look for 3800 to 3900 levels on ABB. I think a little bit of consolidation, maybe for 2-3 weeks, may take place, but then the move should begin on the upside. If you look at the numbers as well, it is extremely supportive. You look at the consolidated numbers in here, you'll be able to understand that in the June quarter, sorry, if you look at standalone numbers in here in the December quarter, they did around 2,400 crores of sales versus 2,100 crores of sales. So there has been a consistent growth of 15% to 14-15% sales growth that is taking place. But look at the margin expansion from 10% margin, it has expanded to 15% this quarter. And hopefully this margin picture of 12 to 15% will remain, and that is where the stock is gaining momentum, because the margins are expanding finally after many years. So if you look at yearly performance since 2011, margins used to be 5%. Look at here, 6%, 7%, 9% till 2015. Then it dipped back, but now it looks like that they're going to get into this band of 12-13% margin. So hopefully ABB is something that is going to perform consistently over the next 4 quarters, and I don't see any issue for the stock to go ahead and reach those 3900 levels. Again, I want to mention one more thing with respect to disclaimer, that these stocks I might have bought earlier and sold, or I might be looking to buy. So that's a disclaimer for you, that I have consistently analyzed these companies for my personal portfolio as well. I might have them. If I have them, I'll definitely mention it, but currently I don't own ABB, but I might own it say in the next month, 2 months, or in that period or so. I may not as well. If you look at ratios, debtor days has reduced significantly from around 158 odd to around 99 at the moment. Inventory days have remained stable at around 80 days or so. In terms of shareholding pattern, 75% with the promoters. FIIs have consistently increased holding here, which is contrary to what they are doing in the market. From around 3.5%, they have increased to 7.5%. DIIs have reduced it slightly to around 9.5%, but overall the business the shareholding pattern looks pretty strong, and it is the public shareholding that has reduced. So ABB for me is a very decent buy at around 3200 at these levels, and on dips to 3200, 3250 with a 3000 stop loss and a target of 3900 over the next few months. I think that is a distinct possibility over this period. The second stock in this list that I want to talk to you about is Blue Star. I believe Blue Star is a stock that has been doing consistently well over the last year and a half, 2 years. And if you look at the charts in this period, it has done significantly well. So if you look at from 20, even from 2021 levels when it was consolidating, if you look at from the beginning of 2022, in a very difficult market of 2022, it did extremely well. From 1000 rupees, the stock has scaled 1500 and then dipped from those 1500 levels a little bit. I think Blue Star, if you get it around 1350, it's a very good buy. It can dip around 1-2% from here. So around 1350, 1340, one can buy with a stop loss of 1280 and a decent enough target of 1700 that is possible in the next 6 months. Again, this is a stock that I had been owning earlier. I had booked profits in this 2-3 times and may like to enter it later on. Currently I am not holding the stock at the moment. Again, a stock that is into the engineering space, again a stock that is into the you can say the white goods space as well. They have a lot of products with air purifiers and water purifiers apart from, you can say, ACs, etc. And they have, you can say, expanded capacity which would come on stream in FY later in FY24, and will begin to, I mean, get into the balance sheet from FY25. But I think with the strong summer around in the next couple of weeks or so, I think this stock would even give you 25-30% over the next 4-5 months, and not even, probably you would not have to wait for the next 1 year or so. So that's my assessment on something like ABB. I think ABB, sorry, that's my assessment on Blue Star. I believe Blue Star over this 10 year should end up performing pretty well. So if you, even if you look at the numbers, the number per se tells you a very strong story. You look at it, 1800 crores of sales, nearly 1790 crores of sales in December 22 versus 1500 crores of sales last year. 91 crores of profit in December 21 versus 104 this time around. So margins maintained at around 5-6% consistently, and sales growing by around 20%. It's pretty good. Even from pre-pandemic time, it was around 1240 crores, which has increased to 1790 crores. So I think this white goods segment should do well this summer. It's going to be a big summer. It's going to be a very hot summer. So I think the numbers per se will end up, I think the company is going to do 27 rupees of EPS easily in FY23. They should do closer to 34 rupees or 33 rupees or so. I think 32-33 rupees in FY24. So the stock is trading at a very reasonable level of under nearly 40 times. So if I take 1380 as the current level, and if I say they'll do 32.5 rupees in FY24, it's trading at 42-43 times, which is very reasonable, and it can easily trade at 50 times or so. So that is why 20-25% upside is very much possible on Blue Star. Again, a stock that I'm looking at again, that I may buy into going forward. But this looks pretty good at the moment. The third in this list is APL Apollo. I believe APL Apollo Tubes is now finally consolidating after a big run up last year. Last 4-5 months, it has gone up consistently. If you look at it here in the last 6 months, although it is consolidating, but if you look at a 1 year chart of it from the levels of 800 odd in May last year, from 800 it has zoomed to 1300 in no time. From May 22 to February, in just about 9 months, it has gone up 60%. And since February, the stock has been consolidating for 1.5 months. So even on the charts, it looks good. One can take a trade with a strict stop loss of closer to 1150 and buy into the stock at current levels of 1200. That's a good 4-5% stop loss, and 20% upside is a possibility. I think it can hit new highs and go to something like 1450 over this period. Again, a company with 33,000 crore market cap, yes, trading at reasonably high PE of 50-55. But if you look at the number, it has become a market leader in tubes and pipes for construction into large buildings and large construction areas. And if you look at the numbers have consistently increased. Let's look at the yearly numbers first from FY18. So from 5,000 crores, it grew to 7,000 crore, and then the numbers went to 7,700 crores, 8,500 crores, and look at March 22, 13,000 crores, and we are expecting somewhere around 16 and a half thousand crores this year. So the growth has been phenomenal. From around 5,000 crores in FY18, it has become 3x. Sales have become 3x in 6 years. That is how the growth has been. Even if you look at you can say quarterly numbers per se, then in December they did around 300 crores versus 3,200 crores in December 21 versus 2,100 crores in December 19 pre-pandemic. Pre-pandemic they did operating profit of 160 crores. This time around they did 270 crores. Compared to December of 21, they did a 30% growth in sales, and in net profit also 170 crores of net profit versus 130 crores of net profit is a decent 20-25% profit growth. So I have no hesitation saying that this could end up being 2,000 rupees over the next 18 months. I will not be surprised if the growth momentum continues. In terms of balance sheet also, they have from around in FY18 they had around 800 crores of reserves, which has grown to 3x in the last 4 years. In September 22, the last reported numbers, they had around 2,500 crores of you can say reserves. Borrowings are comparatively, the borrowings have grown in the last 2-3 quarters, but if you look at it, it used to be around 800 crores here as well in 2018. It's around 950 crores at the moment. It has not scaled up that high. So in terms of ratios also, debtor days is around only 10 days. It used to be 27-30 days some 4 or 5 years back. You have inventory days of around 28 days, which is perfectly fine. Shareholding pattern, yes, promoter hold less around 32%, but look at the FII holding, which has remained strong even in a market where FIIs have sold big time. And this is a big sign where large investors are not exiting some of the stocks. So FIIs hold around 24%, DIIs hold around 10.5%. So that's pretty strong in here. In fact, public shareholding has reduced. So overall, it is a buy. Stop loss 1150, target 1450 or so over the next 6 months. I think it could go much higher than that, but that is a reasonable assessment that we could pick up. The reasonable targets we could maintain here. Next in line, two stocks remain. So Sundaram Fasteners is the next one at around 970. It is slightly smaller company, 20,000 crore market cap, slightly illiquid. So kindly take that on note. We'll have a reasonable stop loss in here, slightly deeper stop loss, but we could see 25% upside. I won't be surprised if we see 1250 on the stock in the next 9 months or so. By the end of the year, we could see 1250 on the stock. Auto itself, the auto index itself has done extremely well over the last 2 years, and it is virtually at all-time highs, and it is breaking into all-time highs. And so I believe that something like Sundaram Fasteners could lead the way. It is the stock itself is at all-time highs. If you look at a 5-year chart of Sundaram Fasteners, you'll understand that last highs were around 945, 950. Beautiful chart. One can keep a stop loss closer to around 940 or so and trade this stock. I think 940 very difficult to see something like 940, 930 to be broken. But if we are looking at 1250 as an upside, a simple equation would be that one should look at. So this is an upside of 270 rupees, and if I am looking for 1:3, then 90 rupees a downside I should be okay with. So let's take an 80 rupee downside in here. So 900 is your stop loss in here. You can buy here, buy on dips. 900 is your stop loss, 1250 is your target. And why I'm saying this is because of the strong numbers in a very difficult environment that the company is doing. So they did 1400 crores of sales versus 1200 crores of sales last time around. Margins have remained stable at around 14%, has not gone down sharply. in a very difficult environment for the auto industry, especially globally, as we are seeing, and overall profitability has remained decent enough, around 8-10% growth. But the company itself has gone into the EV space, have gone into the you can say into a space where they were not before, and they are gaining market share in there, and they have higher margins there. So we are expecting very decent numbers in FY24 from Sundaram Fasteners, and that's why the stock has run up. So that's another pick on my behalf. And finally in this list is Newgen Software, another stock that I bought at very low level compared to what it's trading at the moment, at least 20-25% lower, and booked profits probably a month back. I might enter this again. It is a big, you can say, uh, this stock could be big over the next 2-3 years. That's my understanding. 3,100 crores of market cap, trading at only 20 times earnings at the moment, 18 times 1 year forward earnings, consolidating well around 450-440 levels. Once this breakout happens, we could see major upside. Once this breakout above 480 happens, we could see major upside on Sundaram Fasteners. If you look at a 5 year chart on the stock, I will not be surprised if we see 700, 720 on the stock. So that's my target. Probably one can accumulate here 450 to 420. And in this case, my target is slightly on the higher side. I will not be surprised if we see a 50% upside over the next 18 months on the stock. 700 is a major possibility in here, but one has to be patient. One should keep a stop loss which is pretty reasonable. I mean, if you buy here 450, if you buy it on an average at around 430, 440, then keep a stop loss of around 400 and then ride your stop loss in here. I think the stock could continue to go up. But if you want a shorter term target, then probably buy at 440, stop loss 400, and you should see a good 30-35% upside, which should take you to around 600 levels. So 600, 580, 600 is target, 400 is your stop loss in here, probably in the next 6 to 9 months. Why I'm saying this is because their business per se, 80-90% of their business is India centric. They don't have much of a business in, you can say, USA or Europe. The business is less. So if you look at the sales front, 86 crores of sales came from India and 70 crores from, you can say, other emerging market and Asia Pacific region, whereas USA contributed only 46, and Europe also wasn't that great. So most of the sales come from India and the Asia Pacific region, which is doing fine at the moment. And you look at the growth factor also, 40% growth is coming from India, and that is why I believe that the company, even with the conditions in Europe and US, the way it is pertaining, and mind you, in Europe and US also from July, August onwards, things will improve. So this is a stock to really keep an eye on. I think this can be big over the next 6 to 8 months period. So one can definitely have a look at a Newgen Software as well. So this was my video on the 5 picks from my side for this financial year. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.